Hello to all friends, this is Mojtaba Rasti from the Thales team, and today is October 5th, 2025. I'm here with you to analyze Bitcoin using the Thales Market Screener tool. Please note that these analyses are for educational and informational purposes only, and if you use them to take positions in the market, the responsibility for your profits and losses is entirely your own. In this series of videos, our main goal is to analyze and review the future price of Bitcoin using the Thales Market Screener tool, which you can see here. With this tool, we use data from the derivative exchange, specifically options data, to try to predict the future movement of Bitcoin's price. Alright, we are on the 4-hour time frame. As you can see, even though it's a holiday today, we've seen a strong upward movement from yesterday to today. We managed to reach a new all-time high at 125 and around 728. What we can clearly observe now is a very obvious divergence between the RSI and the price, which could at any moment lead to a price correction. As you can see, after hitting the new all-time high, we immediately moved downward. What we should pay attention to is on the weekly time frame. For a long time on the weekly time frame, we've been moving upward within a bullish triangle, or rather, within a bullish wedge. In fact, this week's candle showed a very strong move. We got really good support at the lower trend line of this triangle, moved up toward the upper trend line, and now we've reacted to that upper trend line. If you look at the 4-hour time frame, you'll see that we've had a pretty good reaction to the upper trend line, to the upper edge of this triangle. It's possible that in the coming days, we might move back down toward the lower edge, somewhere around 120, for example, and the price could revisit that area. Then, we could once again move upward toward the peak of this wedge, which is around 130,000. We can keep this in mind from a technical perspective based on what's visible on the chart. Let's move on to the market screener, which you can actually find on the website www.thales-mfi.com. We'll go into the market screener. Now, I use it to review option entry trades. I'll consider the start of today, which is October 5th, at midnight, up to this very moment, meaning October 5th at 16:17 local time. We'll refresh. In this tool, we have two databases. We'll use the raw database, which actually gives us unprocessed, raw data. It shows us that from the beginning of October 5th up to now, we have about. For different expiration dates, there are about 19,631 Bitcoin in option contracts, meaning 19,631 Bitcoin are being controlled. Let's select the expiration date here. We'll set the expiration date for tomorrow, which is October 6th, to see what traders' outlook and today's incoming trades are like for tomorrow's expiration. About 1,755 Bitcoin are under contract control for tomorrow's expiration. By clicking this option, we can see the result. As you can see, we're looking at a graph where both sides of the chart are moving toward profit. Here, from the at-the-money level, both sides are moving toward profit, but the lower side has a bit more dominance. That means, on the lower side, you see a steeper slope in the curve. In fact, traders are expecting increased volatility in the coming days with a focus on tomorrow. Look at the upward movement. Above 125 and 200 are seen as profitable, and on the lower side, below 121 and 200 are profitable for put buyers, and here as well for call buyers. Now, I'm also checking the process database here, which shows us trades of 5 Bitcoins and above. In fact, the algorithm in this database helps identify trades that were made for hedging purposes and shows the direction more clearly. As you can see, it's bearish, meaning it's like a put buying curve targeting below 121 and 150, basically aiming for this area down here. As you can see, the price has also started moving downward, so here, in fact, the curve is completely bearish. So, in order to actually get a theoretical intersection between option buyers and sellers, I'll overlay the curve of option buyers, that is, call and put buyers, and call and put sellers in one box, and we'll analyze that chart. As you can see, from the intersection of the option sellers chart, the dashed line, and the option buyers chart, the red line, we actually reach a theoretical intersection from the perspective of both groups, which gives this curve a certain shape. Look, at the top, we have an intersection point at 125,700, which we can call the agreement point between buyers and sellers. This is in the profit zone, above the break-even area. The lower agreement area between buyers and sellers is around 121,000, which is at the break-even zone. From the difference of opinion between buyers and sellers, as you can see here, we reach a zone, an area, where one end is where the put sellers chart cuts the break-even curve, which shows that sellers don't want a figure above 126,000 for tomorrow. And there's also a point where our buyer's curve, our option buyer's curve, cuts the break-even line, and their expectation is above 125,500 for the upside. So here, a zone is formed, and as you can see, it's actually the area of agreement between buyers and sellers. That is, it's an agreement in the sense that both groups expect the price to pause in this area. Sellers don't want the price to go above 126,000, they want the price to stop here. Buyers want the price to go above 125,500. So, this is actually a kind of agreement zone where we can expect the price to reach this area, and in fact, it has already been seen to some extent. Look, on this candle, we went up to 125,700, meaning the price came up and reached this point, almost touching it, considering the time at which we did this analysis. Our journey basically starts from the 0 hour, which is when the trades were entered. If we calculate, it's been about 16 hours, which means if we go back about 4 candles, the entry trades were roughly on this candle. As you can see, the upward movement happened here, and we saw this zone. In other words, we saw these agreement points, meaning 125,750 and the lower agreement point at 121,000. We enter these into the indicator that's been designed. For the upper level, 125,750, so here we enter 125,750, and for the lower agreement, 121,100, we enter that as our floor, 121,100. This is basically the expectation. Look, the chart we have, and this indicator we're using, kind of reminds you of the Bollinger Bands. We have an upper band, which is the expectation or agreement of traders at the upper level, and the lower band is the agreement between buyers and sellers at the lower level. So, it creates 2 bands, one at the top and one at the bottom. Right now, you can see the price is moving right along the upper band because of the strong bullish momentum. The difference between this indicator and the Bollinger Bands is that we're actually 1 day ahead of the price. The numbers we've entered are our predictions for tomorrow, which shows that our ceiling is moving upward toward 125,700, and it seems like that's been achieved, meaning this very candle here made it happen. And our floor has come down a bit compared to yesterday, which was here. We've come down slightly, with a gentle slope. And another point is the opening up of these zones. Look, these 2 bands are moving apart from each other, which signals increased volatility for tomorrow. Considering the RSI situation, the divergence, and the fact that our RSI is now below the moving average, it seems likely that we're going to move downward. In fact, this movement of the upper band toward 125,800 was realized on this candle. So, that's from the indicator, and for tomorrow, we can actually predict that the movement will be downward. That bullish move happened a few hours ago on this candle. Now, what I also do is mark these zones, meaning the zone that formed up here and down here, which is no longer really a zone but just a line, basically a point. I show these on my chart as zones and boxes so we can keep track of them. So, after drawing the zones on the chart, we end up with a structure like this. Look, I'm going to remove this indicator now so the chart doesn't get too cluttered. You see, our upper zone, which is this area we mentioned as the agreement zone, seems to have been realized, and here you can see it happened right on this spot. This zone is wider. The agreement area in the chart has these three characteristics, and here it's also been realized with this candle. You can see it's around 125,500 to about 126. We have a lower zone, which is just a point, a line. It's not really a zone. You can see that. In fact, it doesn't have a minimum or maximum, and it's at 121, which has appeared here as a line. And we have a middle zone, where the maximum profit for option sellers and the maximum loss for option buyers occur. The maximum loss for option buyers and the maximum profit for option sellers is a number between 123,000 and 124,000. Here is the maximum profit for sellers, and here is the maximum loss for buyers. So, this is also a very important zone for us, and as you can see, the price has returned there and is fluctuating around 123,000 to 124,000. Our expectation is that this downward movement will likely continue in the coming hours, and we might see this correction continue down to around 121. As we mentioned, this data so far is the result of the analysis of the option contracts in the raw database. Now, let's move to the process database to see if the same view exists there. As we pointed out, the process database shows us contracts of 5 bitcoins and above, and due to the algorithm in place, it filters out contracts that are mainly for hedging or insurance purposes, especially on the put buying side, which is usually done for insurance in these market conditions. You can see here that our downside is in profit, the upside agreement has come up below the break-even zone, and the downside agreement, meaning around 12,700, here around 121, has gone into profit. Again, this zone is our agreement area, meaning the put seller doesn't want to sell below 120, and here the put buyer wants 121 below 129. So, there is a possibility of seeing the price in this area. Because this database only includes trades of 5 bitcoins and above, and the hedging contracts have been filtered out, sometimes it carries more weight for us, and since the data is more directional, it can give us perhaps a better idea. So, we can say that, based on this movement, the downward trend will likely continue to around 121. I'll switch this back to the process database. And I'll remove this, sorry, we've switched back to the raw database. I'll also bring back the short contracts. Now, we have both long and short contracts on the raw database. Let's take a look at. Let's look at delta and gamma, two important Greeks. If we turn on delta and gamma, you'll see that in this situation, in our raw database, we have a very strong gamma around 123,400. That's the at-the-money point for call buyers and put buyers. If we consider these as takers, the other side, which is the maker, actually has negative gamma, as opposed to this positive gamma. Around 123,200, we have a negative gamma, what we call short gamma. So, we can look at it like this. We can show it like this, right at 123,300, which is exactly where we are now, at this precise moment. Break time equals 0.5s/. You can clearly see that the price is also reacting right around this particular area. Depending on whether the option sellers, the call buyers, or the put buyers are more dominant and influential here, their collective influence can significantly affect how the market maker, who is always on the other side of these specific trades, ultimately behaves. Their actions could be quite different. They might decide to either buy or sell the underlying asset. Break time equals 0.5s/. We can effectively use delta and gamma once again to gain a much better understanding of this entire situation. Let's take a look at the coming days. I'll make this window smaller, and if we move the expiration to the week, let me add the first week of October as well, you'll see that still nothing changes. Both directions are still visible as possibilities, but the bias is more to the downside. That means there are more put buyers here. This can also be seen in the delta, showing how much deeper the movement is toward the downside. If I remove tomorrow, you'll see that for the 7th alone, today's trades for the 7th alone are showing a completely bearish situation. That means a full put has been bought, expecting the price to go below 121,300 to be profitable. So, we can expect that our movement will likely still be corrective for tomorrow and the coming days, heading downward. If we look at today's trades for the October 10th expiration, October 10th is Friday, which is the weekly expiration and an important one, you'll see that again, our curve, today's trades, today's inflow for Friday's expiration, is showing a bearish outlook for the end of the week. We're here right now. Notice that as the price increases, the delta is still decreasing, meaning we're facing call selling, negative delta, call selling, and a ceiling is being seen. As the price goes up, the red curve also goes into loss, but as the price drops, we see an increase in delta. From here, as the price drops, we see an increase in delta up to around 115 and about 117,300, which is seen as the floor. When put selling happens, traders are looking for a floor to enter the market up to about 117. Below that, we have put buying again. From 117 down, there's more put buying. But this area, up to about 117, is seen as a price floor and support is seen there. So, to see a lower floor, we can interpret this as a corrective view as well. Now, let's go back to the same 6th expiration and take a closer look at the trades. Let's take a look at the details. We see that the total trades are 1,775 Bitcoin for tomorrow's expiration, which includes both long and short positions, that is, both buying and selling contracts. Let's see how much buying there is. Out of 1,775, there are 1,147 Bitcoin in contract purchases, call and put contract purchases. Let's see how many calls there are. Out of these 1,147, 488 are call purchases and 658 are put purchases. You can see that put purchases are clearly higher. Put purchases are about 200 Bitcoin more, which shows a bearish situation. Where is it targeting? Look below. It's aiming for below 122,600 to be profitable. To see below 122,600 in profit, which we've already come down to and observed here. You see, this downward movement is actually the result of these put contracts being executed. Where are the calls targeting? The calls are targeting above 124,900, and we could say that on this bullish candle, we actually used up and consumed the calls, and they've been realized. So, overall, we still think that the outlook is probably a correction, a short, or a sale. How many sell contracts do we have? there are 627 Bitcoin sell contracts, 323 call sells, and 303 put sells. They're very, very close to each other here, so we can't really give much weight to either side. The call sells are slightly higher, which again gives us a bit of a bearish outlook. Right now, the price is actually moving downward, heading toward the realization of the put sells. But the call sells here, you see, don't want anything above 125,300, which seems to have already been realized on this candle. We've seen the top. The puts, the floor that the puts want, the put sellers want, is below 122,500. They don't want anything lower than that. So, up to 122,500, which has pretty much been realized on this candle, but according to the lower zone we have here, which you can see is very narrow, the area of agreement, meaning the agreement between buyers and sellers, is between 121 and 121. So, realistically, we could come down further. We've also reviewed the details of these trades. Let's go to the process database, and the important point about this process data is that we saw it's completely downward. If we move the trades forward, it shows that here, a bullish leg comes up, but if we move this slider forward again, you'll see that the recent trades have become extremely bearish, meaning the bearish outlook has intensified in the past hour. Now, in this database, we're looking for size. In the process database, let's see how many large trades we have, for example, trades above 10 Bitcoin. There are 30. We want to reduce the number so we can check them one by one. For trades above 15 Bitcoin, there are 13. We have 13 trades above 15 Bitcoin, and if you look here, this is the block number of the trades, and you can see here that the blocks are paired 2 by 2. Those whose block numbers are paired up like this are basically part of a single strategy. In other words, the options contracts have been closed as part of a strategy. As you can see here, all of these are currently showing a long straddle for tomorrow, meaning an increase in volatility from, in fact, 122,000 downward. Again, here you see two blocks with the same number, which is again a long straddle, an increase in volatility for tomorrow, below 122 is profitable, above 125,900 is also profitable. So, these are traders who can't precisely predict which direction the market will move, so they use this feature of options and strategies like strangle and straddle to take positions on both sides. Basically, they set up their positions in a way that they can profit from a move in either direction. And here again, you see two blocks, which is again a strangle. This is a strangle, this is a long strangle, and in this long strangle, you see, above 124,400 it becomes profitable, and below 124,000 it also becomes profitable. So, there's a kind of uncertainty in the market. It's hard to predict which direction the movement will go. But we can see the right trades right here. For example, if we have a 30 Bitcoin trade here, a 30 Bitcoin long put for 117,000, that's actually very interesting, a high volume compared to the other trades here. We have a 20 Bitcoin short call at 127,000 here, which means the possibility of a move up to 127,000 has also been considered. Of course, we've already gone up to 125,700 here, so the possibility of a move up to this point has also been taken into account. And here we have the 23 Bitcoin game, short put 114, which again has seen the bottom, the 114 bottom, for the coming days. So, putting all this analysis together, it seems that in this upward move, we've seen this top, we've hit this important trend line, this trend line that we saw on the weekly chart. We've hit this trend line, and we'll probably see a reaction here, just like here, and move back inside the triangle. Let's take a look at the liquidity, the heat map of liquidity in the 24-hour time frame. You can see that above, we don't really have much liquidity left up to around 26, even 27. But below our price, there's liquidity that's very close to the price target, 122,400, 500. Liquidity starts to build up downward all the way to 121, and the target is closer to the price. So, the probability that the price comes down here to collect this liquidity might be higher. Let's take a look at the 48-hour chart. It's the same in the 48-hour chart. You see, there's even a gap above where there's some liquidity, but below the price, there's a lot of liquidity down to 120, which means the price could actually move down to collect it. So, it seems that we have a chance for this corrective move to continue, at least down to 121, for tomorrow. Although, we could even see it go down to 117, this important level here that has flipped, has been broken, and we could see a return to it, moving more inside this triangle, actually. Thank you for your attention.